Hello and welcome. This is Joseph Nicolini, Director of Financial Aid at the Hofstra North Carolina J School of Medicine, and this is our module on managing your money in medical school. This module covers checking and savings accounts and the costs and fees associated with maintaining them. It talks a little bit about ATM fees. We'll talk about spending wisely and living on borrowed money, and finally we'll offer a brief introduction to credit cards. So when setting up a checking and or savings account, it's important to find a bank with free checking to avoid monthly fees. Many banks will charge a monthly maintenance fee if a minimum balance is not met. This may not necessarily be an issue for medical students that are living off of financial aid refunds and using those refunds for their cost of living expenses. As these checks are typically large, you'll receive them in the fall, you'll receive them in the spring. And the amount that you receive will typically surpass the monthly minimum that's required. It's important, regardless though, to keep an eye on your account towards the end of the term and towards the summer and over the summer, because these are times when the accounts typically tend to run a little low. So find a bank that offers a Visa or MasterCard debit card along with the checking account. This will help you track your expenses during the academic year. And it's also important to find a bank that's close to campus. There's a TD Bank right here on Hofstra's campus, but there are many other banks that have branches within 5 minutes of campus. So if you already have a checking and savings account set up, look to see if there's a branch close to campus. So use your bank's online banking feature or free app to regularly monitor your account to pay bills. Again, this will allow you to easily and accurately track your expenses. Here's some common account fees, account-related fees that accompany checking and savings accounts. And these are really 3 ways that the bank can make money off of you. Basically, for doing nothing, for nothing more than having an account with their bank. So the minimum balance requirement basically states that you must maintain a certain amount in your account at all times, or you'll be charged a fee. So for example, if your account minimum is $100 and then one day you fall below that and you hit $99, you'll be charged the monthly fee. Another way is through the minimum combined balance requirement, and this basically states that you have to maintain a total balance across all of your accounts at that particular institution, otherwise you'll be charged the fee. The average daily or monthly balance requirements typically states that you must maintain an average balance in your account. So even if you fall behind one day but your average is above the minimum, you'll be okay, but if not, you'll be charged a fee. And these are, again, 3 ways that banks make money off of checking and savings accounts. Here are some additional fees that you may be more familiar with. The overdraft fee, so if you mistakenly lose track and you draw your funds down below zero, you'll be charged as much as $35. Fees vary from bank to bank, but that's the average. The return check fee, so if you bounce a check, you write a check and you don't have the funds in your account to cover it, you could be charged as much as $50 for that. Here's a student example using some of those fees. So this particular student opened a checking account that had a monthly fee of $14. They didn't do their due diligence and find an account that offered free checking. There's a non-sufficient funds or an overdraft fee of $35 and a return check fee of $50. So let's look and see what this actually costs the student. So it'll cost $168 a year just to have an account with the bank. This equates to $672 over 4 years. At the end of each semester, you lose track, the student loses track of what's in his or her account, and there's 3 overdrafts. So there's 3 times that you go to the ATM and you take money out, or you pay a bill, and there's not enough money in your account to cover what you're taking out. This will cost you $420 during your medical school career. And also during that time, you happen to bounce a rent check 3 times for the same reason. You just lose track of what's in your account. You're not paying close attention to your account. So this will cost you $150 for those 3 bounce checks. And then in your lease, your landlord stipulates that he or she will charge you $50 each time you do this. So this brings your total to $300. So the grand total that you're being charged and that you're paying for not paying closer attention to your checking account while you're in medical school is $1,400. It's not necessary. These fees can be avoided. A quick word on automated teller machines, or ATMs. They're all over the place. This is how most of us get our money out of our accounts. So it's important to only use your bank's ATM, and some banks actually charge you for ATM use, so try to avoid these banks because ATM fees can add up very quickly. The average ATM fee in the New York metro area is about $2.70 per transaction. If the source of your money that you're living off of is currently a student loan, you're already paying an origination fee on this, and you're already paying interest to borrow this money. So to pay additional money to access the money that you're paying for, it just doesn't make financial sense. So here's a simple example. Let's say that you've chosen a bank that's far from campus, and the only way you can get your money on a daily basis or a weekly basis is to go to a non-branch ATM. So here, this example shows that the student's gone to a non-branch ATM twice per week, and they're getting charged $2.70 per transaction. So look at how this adds up. It equals $5.40 a week. Not that bad. It's $21 a month. It's $108 per term. You're spending $216 for 1 year and $864 during med school. If you're borrowing to cover living expenses, it's costing you $1,000 just to access the money, just to take the money out of the account. Again, fees that can be avoided and fees that you shouldn't have to incur just by paying closer attention. An added word about ATMs. So for example, if an ATM transaction is $2.50, it's $2.50 no matter how much you take out of the bank. So think of each transaction from an ATM in terms of percentage of your money. So if you go to a non-branch ATM and you take out $20, $40, $100, or $200, it's going to cost you $2.50 no matter what. So that first bullet here, this one here, this shows you that it will cost you 12% of your money to make that $20 withdrawal. So if you must use a non-branch ATM, don't use it to withdraw $20. Take out as much as you can. It'll definitely save you money over the long term. So here's a little bit about spending wisely and not purchasing things you don't need while you're in medical school. So this list basically shows a couple of common consumer products, and we'll go through the list really quickly. So 7 For All Mankind jeans. Hey, I need clothing. I like these jeans a lot. They're the only jeans that look good on me, so this is going to cost you $225. I typically tell students that it's cheaper to purchase a coffee maker than to buy coffee at Starbucks, and it's typically the case, especially if you drink coffee a lot. So this particular student decided to buy this espresso machine, and I said it was cheaper, and who doesn't like espresso, which is true, but this espresso machine is going to cost you $400. Medical school is exhausting. Students need breaks, and I totally understand that. But a weekend at Bermuda at the Fairmont Hamilton probably isn't the best way to spend your money, especially if you're borrowing the money. It's going to cost you $824 to do that. That's just airfare and hotel. That doesn't include any other expenses for food and drinks. So you need a weekend away. I get that. This is not how to spend your weekend away, though. You need a TV for your place. 60-inch LED, nice TV. It's a smart TV too, so you can hook it up to the internet. This will cost you $1,700. You need to eat. You're tired of takeout. You go to a pricey Long Island restaurant. You bring a friend. This is going to cost you about $215 for dinner with tip. You do this once a month for an entire academic year, or you do it 10 times over 4 years. It's going to cost you over $2,000. And that, you know what? I need a car, don't I? I can't drive stick. I need a car. I need a 5-speed automatic, so I'm going to get a Honda Civic. It's affordable. It's $18,000. It's new. It'll last you, but it's money that you don't have. Keep in mind, if you're borrowing financial aid funding, you're not supposed to spend the money on these things anyway. So this is just an example. This is not how you should actually be spending your money. So let's go over this chart, and this basically speaks to each one of these consumer goods that I just mentioned and what it's actually costing you if you're using borrowed money. And over here too I have the logical response to the rationale that was provided. So let's look at these jeans. They cost you $225. It's going to cost you $86 in interest if you're borrowing the money. So the rationale is I need clothing, and yes, I understand that, but the Gap is a fine retailer, and they always have decent sales, so you don't need to spend $225 on jeans right now. Besides, it costs you almost 40% more if you're using borrowed funding. Would you ever walk into a store and pay 40% over ticket price? Probably not. So the espresso machine, the $400 espresso machine, it's going to cost you $152 in interest. It's just not worth it. A $30 coffee pot can actually brew the same coffee and save you a lot of money. The weekend in Bermuda, it's a lavish expense. It's something that you definitely don't need to do. There's plenty of things to do in this area. Take a drive somewhere if you need to get away. The beach is only 15 minutes away from campus. I understand that the beach that's close to campus isn't necessarily the beaches of Bermuda, but it's worth it. The 60-inch Samsung TV, I more than anybody understand the importance of watching a football game on a big screen. But you know what? Deal with an older model for a few years. Get the 42-inch Vizio. You can score it for about $300, which is actually half of the interest that you'll pay on this bigger TV. Better yet, have your roommate bring his or her old TV, bring your old TV, and it'll save you a bunch of money. The dinner for two, you're sick of takeout. I totally understand that. But doing this 10 times over the academic year is going to cost you a lot of money, and it's a lot of money that you don't necessarily have. If you go to the diner, it's going to cost you about $30 for two people. Good food there, and it'll save you $819 in interest. The car, I understand you having here, this is somewhat of an irrational example, but it's not unimaginable. You may need a car, but buy yourself a decent used car for a fraction of the price, and you'll really save a ton of money. You especially should not be using borrowed money to buy something like a car. So here are the totals right down here, the total in interest. What we've done here, we'll take out the Honda just for the sake of this discussion, and we can see that all of these expenses do add up. So you've actually spent right here, you've actually spent $7,317 during medical school, as opposed to what it would have been if you were not using borrowed funding, which is $5,298. So you accrued $2,000, over $2,000 in interest, simply by using borrowed money to buy things that you don't need. So a little bit about credit cards. This is just a brief introduction to credit cards. We have another module on the financial literacy portion of the financial aid website that speaks specifically to credit cards and credit reports, so we'll just scratch the surface here. And credit cards become incredibly dangerous and financially senseless when they're mismanaged. If you can, get a credit card through your bank. This will make it easy to monitor your account. We spoke about that a few slides ago, by using the online banking feature or by using the smartphone app. And it's important to know that credit cards aren't all bad. They do negatively affect your personal credit, but they are a primary way of actually establishing personal credit. So it's important to recognize how a credit card actually works. So credit card rates now are higher than they've ever been before. The average interest rate on a credit card is about 13.33%, and this is for people that have good credit. Most cards typically max out at about 29.99%, which is absolutely insane. But there are cards that actually have higher rates for people with really poor credit. So there are credits for credit cards for people that have no credit or have poor credit. Little or no credit, and these rates often hover between 20 and 25%. They typically could be found right around that 23.99% rate. And these cards typically have an annual fee, and the annual fee can range anywhere between $70 and $150. But be careful here, because there are incredibly bad offers that exist with these cards. Paying an annual fee on a credit card is not necessary either. So it's important to keep that in mind. If you do have a credit card, never carry a balance, and if you do, make sure it's temporary. The best way to throw your money away is by carrying a balance on a credit card. Take this example here: a small balance of $1,000 on a credit card with a 19% interest rate and a monthly minimum payment of $20. we'll use for this example. So in order to pay this amount off just by paying the $20 minimum payment, it'll actually cost you 8 years, and it'll cost you almost $2,000. So you're really paying twice the amount of whatever it was that you purchased just by paying the monthly minimum. So we're not going to get too much into detail about monthly minimums because we'll do it in our other module, but it's just important to recognize this. So here's another student example. So a student not truly understanding the way credit cards work does the following, and this is a credit card with a 19% interest rate. So he or she charges books in the summer of the first year. Same student fails to pay the amount off in the total. Pay the amount off in total at the time that he or she receives a refund from that year's financial aid, and as such, this money now becomes allocated elsewhere. So the student pays the minimum each month, but this costs about $1,550. The student also uses a credit card to purchase a few things for his or her new place. So these costs, as I mentioned before, cannot be included in the student's cost of attendance, so there's no financial aid here. And then at the end of the month, at the end of the semester, the student uses the credit card to buy food. He or she didn't budget properly, which we've talked about budgeting in our other module. So this costs about $250. So the credit card balance at the close of the semester is $2,350. So what does this mean financially? First-time cards typically don't have a spending limit this high, so if this is your first credit card, you're probably not going to be able to charge this much on your card. But for the sake of argument, the balance of $2,350, it's essentially put the student underwater, and there's no allowance in future costs of attendance or future budgets to account for this. So even if the student doesn't charge another thing over the next 3.5 years of medical school, this $2,350 essentially accrues $1,000 in interest, and if the student pays off about $70 a month, he or she can pay off this $2,350 by the end of medical school. But that's at $70 a month, and that's with an additional $1,000 charged on this card to this student. Let's say, and this should never happen, but let's say the student decides to pay the minimum forever, and the minimum is $47 a month. This $2,350 actually takes 25 years to pay off and accrues over $6,000 in interest. And this is if the student never charges another thing and takes that $2,350 and pays off the $47 a month. And this is just a basic principle of paying the monthly minimum on a credit card and why it should never be done. So some take-home points, and these are, if you take nothing else away from this presentation, this is probably what you should walk away with. Pay close attention to where your money is going. This is a common theme that's going to run throughout each one of these modules. Borrow as little as possible while you're in medical school. You'll have plenty of time later in life to buy the things that you really want, to get those lavish things that you really feel you deserve. Don't pay fees that you can avoid. These are fees that are associated with checking accounts, with savings accounts, with credit cards. There are ways to avoid fees. Do your research and don't get stuck paying these fees. Definitely don't buy unnecessary items, especially with borrowed money. The money in your financial aid refund is specifically earmarked and should be dedicated only to educational expenses and not additional unnecessary items. Don't rack up credit card debt, and certainly don't carry a balance. We saw the slide before what this could mean and how this could negatively affect you, and in future modules you'll see how this could negatively affect your credit. And be smart about your money. Every decision that you make in medical school with respect to money has long-term implications. It's important to recognize this. It's important to recognize it now while you're in medical school, so you're not paying the price down the road. This is my contact information. Should you have any questions about this presentation or anything at all regarding financial aid, feel free to give me a call. Thanks for listening and for your time, and I hope you enjoy your day.